Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here with a breakdown of the action in today's session and a look at how the week unfolded. And even though we saw the NASDAQ with a down day on Friday to finish off the week, we did see a rally into the close. So we were down, Ed, on the NASDAQ, but not out.
Yeah, so the market definitely was tested. A little bit of fight at the end here. I want to take a look at, there are definitely some leaders that took some hits, and one was Albemarle. And then Nvidia and Toll Brothers are among the notable earnings reports next week.
All right, we'll take a look underneath the surface with those stocks. But first, let's analyze the major indexes today. So we had the NASDAQ closing down 0.6%, leading on the downside. Also down today was the S&P 500, down 0.3%, but it was a mixed day. We had blue chips and small caps up today, with the Dow up 0.4% by the end of the day, and the Russell 2000 up 0.25%. So if we look at the NASDAQ here, we can see the tech-heavy index coming down to that 21-day moving average, but finding support there.
Yeah, found support there. Didn't undercut the low from about a week earlier. So that was a positive. It's clearly above the 200-day line and above the December lows. So this looks pretty healthy. I mean, you just don't know yet. I mean, the thing is, this looks healthy. I think one of the disappointing things is that the market looked like it was coming out of the pullback, like Tuesday, Wednesday. Here we go. It looked like a lot of leading stocks came out. So even though, the major indexes are flat or slightly higher for the week, it felt a little bit more because, because we were sort of, you start banking in the gains from Tuesday, Wednesday, and it was actually pulling back. But looking back, as you see, like we've run up a lot. This is really a fairly brief pause all in all. So, I mean, the question is, do we keep on, do we keep on going sideways? Do we break out of it? We could also break down. So probably a time for investors to be patient, wait for some more clarity on that. But this still seems relatively normal.
Exactly. Yeah. Seeing resistance at that round number of 12,000 still, but all in all, this uptrend is still very much intact. And as we've said, pauses in uptrends are healthy and needed. And even though shakeouts are not fun when you're in them, they do help provide new opportunities. So we do have to keep that in mind. But it's all about the timing, right, Ed? Even if we see stocks that are acting strong on days like the 2nd of February, just putting that in context, that was not an ideal time to be adding exposure just because of the strong move up that we had made. It seemed like at that point we were due for some sort of pause, and it's not clear yet, like you said, if we are going to come out of this or deteriorate further. So that means even new buys at this time are still in a little bit of an uncertain category, I think.
Yeah, I mean, obviously, if the market ultimately moves higher, a lot of them, if you made new buys in the last few days, a lot of them are going to work out, but you don't know. I mean, and so you don't have hindsight in the moment. So you want to be just looking, seeing what the market is doing, not hoping that the market will keep on going higher.
But we do have to remember that we are, as of now, still in a power trend with a strong 21-day line. That's the green line there, in an uptrend above an uptrending 50-day line. So I think that's the real test right now for this uptrend. Can we continue to hold this 21-day line? Can we convincingly bounce from that level? That could be a time to add exposure. But at the same time, we have a very different economic backdrop still that the market is contending with versus the last time that we had a sustained power trend in 2020 and 2021.
Yeah, I mean, it's not like the backdrop is that bad. In fact, we're sort of viewing like now that the global recession risks are off the table, and wage growth is cooling down. But the fact that the economy is not going to go into recession, or at least that's the hope, all of a sudden that means that the Fed can and maybe will raise rates for longer, and that inflation will be a little stickier. And it's not that this is terrible. It's just that I think the market was rallying on, yay, things are going to get better, but they didn't. There's another side to it. And so we're sort of pricing in the good news and not taking in the other effects.
Right. Yeah. Not so fast market. All right. And let's also take a quick look at the other major indexes. Here's the S&P 500, looking a little weaker than the Nasdaq. It did undercut that low from last week and closed right around the 21-day line, but still setting up for a potential move above this recent consolidation, and it's right around its highs from late last year. So will that be support? We will have to see. And we could also take a look at the Dow reversing higher today. So leading today, but still range bound. We can see if either we're going to break out of this to the upside or break down to the downside. A pretty defined trading range here now at this point. Small caps also up today, trying to continue to bounce off of their own 21-day line, the IWM ETF here. And now let's take a look at the 10-year Treasury yield reversing lower on the day. So maybe that boosting stocks a little bit today. What do you think, Ed?
I think so, because before the open, they got as high as like 3.93, and it didn't get that high at the pre-market, but it came right up to 3.89, was just below the late December highs. So that was sort of a resistance area. So is this just a pause? Is it going to find and then blow through it, or is this going to be a real resistance area? The big move in the past couple of weeks, that's hard to take. I mean, it's one thing if the market, some of this reflects stronger growth, as we were saying, but also this is a big reason why the market has slowed in recent weeks.
Which is exactly why we're keeping tabs on it, along with the dollar. So seeing a similar move here with the dollar as a 10-year yield.
Yeah, and that's moving with the yield, and that's pressuring overseas growth, exports, translations on that. So not great for the market in that regard, but it is well off its October or September highs.
It is. And now let's take a look at some sectors. XLE taking a huge hit on Friday, off 3.6%. So a lot of weakness coming into this one at the energy sector. Let's look at the metals and mining ETF, XME, off Friday by about 1.7% for the week, still up 1.7%, hanging in there. And then we can also take a look at more technology related themes like IGV. This is the tech software ETF, down about 0.3% for the week, holding right around its 21-day line like the NASDAQ. SMH also took a hit on Friday, down 1.4%. It's testing its 21-day line too. So is this just a continuation of the recent pause after a huge kickoff to the year in January for tech and software and chips? I guess we'll have to see.
Yeah, I mean, they all look pretty much the same. They're all doing some tests, and we just don't know yet.
And moving on, let's take a look at Albemarle. Very disappointing today, seeing the stock down 10%. Some massive volume just one day after a potential buying opportunity here for the lithium player, reversing higher on earnings, up some 10%. No, not 10%, just 4.7%, but down 10% today. So erasing yesterday's big gain and then some. So even though you see a strong move on earnings and some promising fundamentals, Ed, that doesn't mean that all stocks are immune to getting smacked shortly after an impressive move to the upside.
Yeah, it's one thing when you have earnings reports and the stock falls on that. Okay, you sort of, that comes with the territory, and it's no fun, but that's sort of what you expect. But boy, there were a number of these kind of stocks this week where things seem fine, and then a day or two later, they sold off really hard. Now, some of that's the market, some of it there might be other reasons. There was lithium stocks fell because there was some more concerns that lithium prices will fall more significantly in 2023. But wow, I mean, you have to prepare for it. On the other hand, if you look on a weekly basis, it actually doesn't look that odd, but that's a reflection of how wild and whippy this thing is. I mean, this is not good. This is an outside week. It's not good, but you can imagine it actually does it. That this is sort of in character with it, and doesn't mean it's dead in that regard. But boy, investors have to take action on that, and you can't freeze in the moment, and sometimes you just have to accept these kind of losses. And which one of the reasons why sideways markets are more difficult, because it's less forgiving. It's less forgiving. You can things won't necessarily come back for you.
Yeah, and Ed, is this a warning sign for the broad market, or is this an isolated incident? I mean, we talked earlier on IBD Live about how stocks like Etsy and others, I mean, maybe Etsy was moving in sympathy with Shopify, but we're not seeing breakouts just smooth sailing and working. We are seeing, at best some head fakes, some breakouts that are quickly breaking down. Does that mark further trouble potentially for the broad market?
Well, it's a little unsettling. I don't know. It's hard to know because there definitely seem to be there. I mean, it's like overall leading stocks did okay. Overall, the major indexes didn't do that badly this week, but there were big sell-offs like this in various cases. So that is a little troubling, and it's just something to maybe keep in mind. Don't get too concentrated in stocks because to avoid things like this.
Right. And we could very well see the uptrend hold up at the 21-day line, but we can't just ignore some of these warning signs. We got to temper the enthusiasm here. And now let's take a look at Nvidia, as you mentioned, Ed, reporting earnings next week. What a move this stock has had off of its lows. Took a hit on Friday, down 2.8% for the week, up about 0.6%. So up now 1, 2, 3, 4, 5, 6, 7 weeks in a row. But the last 2 weeks closing well off highs. I guess understandable to see it losing some steam after a strong run. But what would Nvidia's earnings reaction mean for the market next week? Potentially, it could have a big impact, at least on the chip sector.
Oh, absolutely. Nvidia and Tesla are among the two mega caps that are really performing the best since the January 6th low. So this is important. And you say the whole chip sector will play off of it. Technically, on a daily chart, this could have a handle to, say, a large consolidation, but it would happen we only have 2 more days because we're not here on Monday. So 2 more days, and then there's an earnings. So the moment the handle comes in, then there's earnings. So we'll see. But yeah, we're expecting another big decline, not as big as the prior 2 quarters. And then there's supposed to be growth in the current fiscal year, which started in February. So strong growth there would be really important. It'd be nice to see if they say anything about AI demand. That's one reason why it has rallied so much, because of all this attention on it. Mm-hmm. So yeah, I think it could be really important for the tech sector and the overall market.
Yeah, so one to watch from that perspective. And then in terms of a potential buying opportunity, if we do see a handle form, I mean, if we got a breakout above that handle, that would put it even more extended from the moving averages, which right now it's almost 19% above the 10-week moving average. But if the market gets its act back together, if Nvidia's rocking on earnings, if Tesla's rocking on earnings, maybe we shouldn't be as concerned about how extended these stocks are from their moving averages if they're clearing handle entries. What do you think about that?
I mean, you could, but you'd also have to be ready to say, like, that didn't work, because might not, because it is extended, and we're not as fresh into the rally, because it was pretty extended when it broke out of this bottoming base several weeks ago, but it just blew by. And I mean, look, if the market surges along, everything's going to go, and stocks like this are going to make big winners. But yeah, if the market's still going sideways, and it pops out, it could easily come back down, or so. It would be a higher risk trade. There's no doubt.
Mm-hmm. Well, we'll keep an eye on that one. Toll Brothers also going to report earnings next week. This group, 8 out of the 197 groups that IBD tracks. We do have a handle that we can clearly see here on the weekly chart, Ed, in this big cup with handle base. Going on over to the daily chart, we can see it a little bit more closely. It did close below the 21-day line today. But we'll have to see what earnings are like next week, if it can fuel further gains, or if the stock deteriorates further and then potentially tests the 50-day line.
Yeah, and some other builders did too. I mean, look, mortgage rates have been rebounding with Treasury yields. So just as yields were falling from their highs, and that lifted the housing sector, now that's a pressure. So the earnings will be important, but be honest, people may be paying more attention to the bond market. I just want to make one little note, is that where you put the top of that trend line that you did, that's probably really the top of the handle, because because the other one was that weird day when the nicest stocks were trading. So don't use that as a handle, but not, but if this does move out, this or some other names, or could could be potential buys. But again, that's bond yields and treasury yields are probably just as important, if not more so, than the earnings.
All right. Well, we'll have an alert set. And yeah, that's a good note. Any stock that you see a big weird bar, check and see, is it an IZ stock or NYSE stock rather? That would be a good clue to take note of. All right, Ed. Well, as we wrap up this week and take a look at the week ahead, how should we be preparing? It seems like we've got more earnings reports coming up, but we should be assessing our portfolios. What should traders be thinking of right now?
Yeah, it's probably a good time to be looking at the portfolios. We had a run up, we're having a pullback. So it's probably a good idea to like, should I take some profits in some of these names? Should I, hey, are some of these just really lagging? And decide, do I want to reduce overall exposure just a little bit? I mean, just maybe take just a slightly more defensive posture. But at the same time, you should be preparing. There's a lot of stocks that are forming handles now that are coming down to moving averages. So if the market turns up, a lot of buying opportunities might present themselves, and you want to be ready to try to grab them as soon as possible so you don't get them extended. So, there's got a 3-day weekend, so you can do a lot of work reviewing your trades, reviewing your portfolio, and looking at potential new buys.
So true. And today on IBD Live, we had Ryan Pierpont, who had multiple top finishes in the US Investing Championship, go over more than 15 stocks on his watch list. So if you missed the live show, you can check out that recording for a look at stocks that are on his radar, and you can maybe add those to stocks that you are screening this weekend. You can take a look at those. All right. Well, that is it for today. Hope everyone enjoys their 3-day weekend. The team will see you right back here on Tuesday.